You're watching Mirror 7 News. Stay informed, stay ahead for more news.
So here's a story that's been making headlines again. Neil Woodford, once hailed as a superstar in the world of investing, has been hit with a massive penalty by the UK's financial watchdog, the Financial Conduct Authority, that is, FCA. We're talking nearly £46 million in fines, with almost £6 million personally aimed at Woodford himself, and £40 million for his company, Woodford Investment Management. This all ties back to the dramatic collapse of the Woodford Equity Income Fund in 2019. That fund was once worth over £10 billion and had attracted around 300,000 everyday investors, many of whom trusted Woodford based on his glowing reputation. He was often referred to as the UK's Warren Buffett, and people believed he could turn their money into long-term gains. But things went badly wrong. Between mid-2018 and 2019, Woodford and his firm made what the FCA has called unreasonable and inappropriate investment decisions. They shifted the fund's portfolio away from liquid assets, things that could be quickly and easily sold if investors wanted to cash out, and moved heavily into illiquid, harder-to-sell investments. That became a huge problem when investors started pulling their money out. The fund simply couldn't keep up. By the time the fund was suspended in June 2019, only 8% of its assets could be sold within a week, when investors should have been able to access their money within 4 days under the rules. This left thousands of people stuck, unable to withdraw their savings, many of whom had invested for retirement or other long-term goals. The FCA has now said that Woodford didn't fully understand his responsibilities, and that neither he nor his firm reacted appropriately as the fund's value crashed and more investors rushed to the exits. Instead of addressing the risks, they dug in, and that left those who didn't get out early at a major disadvantage. To make matters worse, Woodford is appealing the decision so the fines and bans are still technically provisional. But the regulator's message was clear. Being in charge of other people's money comes with serious responsibility, and in this case, that responsibility was not taken seriously enough. It's a cautionary tale, really. Even star fund managers with glowing reputations can make poor decisions, and when they do, it's everyday people who pay the price. Stay subscribed for more videos.